Hey guys, welcome to our second video. Chris here again, founder and CEO of Precision One Lending LLC. I'm here at the home office on this lovely Monday morning. It's only the 5th, but we got our Christmas tree in the background up, holiday spirit all around, and it's a great time to be alive. Today I wanted to get in depth on what kind of loan products we offer. We offer a wide variety of startup funding options to established, but mostly new entrepreneurs who want to get in the game. They need help starting their businesses. Whether you're in insurance or you're a towing company or you work in the medical home care industry, we have loan products available for all different types of businesses. So that being said, let's get in depth on what kind of loan products we have, the different types of lenders we have. So we'll get into that so you guys can see how your company fits into the underwriting process. When we begin the process for underwriting these loans, you'll have some more background information and in general a better understanding of what's going on once we get started. So first things first, who are the lenders? Who are the guys that actually do the funding? First, I just want to say our lending network is growing. We're making new partnerships on a weekly basis, so our lending options will continue to grow as we grow. But for now, let's go over who's currently doing the funding. So this is going to be lending category A. We'll start off with category A. Best case scenario, you fit lending category A. You got all your I's dotted, T's crossed, business plan, credit, everything looks great. A lender can look over the file and see that you're exceptionally responsible with money. Again, this isn't everyone, this is category A specifically. So we'll get into the other categories in just a moment, but for now, the lenders in category A are going to be banks and the SBA. Average minimum credit score requirement for banks is going to be about 720 or above. You can be an established or startup company. Loans, lines of credit, terms range from 1 to 5 years. You can borrow $100,000 to $250,000 for new businesses. Established, you can get all the way up to $500,000. SBA goes all the way up to $5 million. APR is going to be from 8 to 36%. Of course, all that varies, but that's the average bracket for most of our financing options for lending category A. We don't expect most people to fit this category, but if you already got your ducks in a row, more power to you. This is what you're looking at. So these are the options for lending category A. There's 3 categories. So for our next, lending category B. So everyone knows we still do have bank options for lending category B, but for the most part, we're going to be using, another drum roll, non-traditional business loans or alternative financing. What is that? This isn't Chase or Bank of America. These are lenders that offer products like merchant cash advances, hard money loans, equipment loans, inventory financing, microloans, collateral-based loans. Average minimum credit rating for those who fit this category is going to be around a 650. Rates vary from 10 to 70% depending on the terms, how quickly you repay the loan. Approvals for this bracket are based on a number of things that can go anywhere from $10,000 all the way up to $500,000 on equipment loans. We'll have that information available to you after we do the underwriting, of course. And that's it for category B. So let's get into our last category, last but certainly not least, is category C. Let's see who these lenders are and what they're offering. Another drum roll. Lending category C, private lenders. Who are private lenders? So these are lenders who want to get a higher rate of return quicker and are willing to take a bigger risk. And how they do that is by investing in high-risk companies, right? Investing in lending category C. So let's say we complete the underwriting, we talk to lenders, they like you, they like the product you have, they see potential in your business, and they're willing to loan you the money. What does that look like? What does the terms look like with a private lender? Well, first, for our venture capitalists that require a 20% equity stake in your company, meaning if you're willing to give 20% ownership of your company, then they're willing to sign off on a loan with you. So let's say you don't got the credit, you don't got the money, you're willing to give up part ownership to be able to start your company. These are the go-to guys. Very similar to angel investors. They just go about it differently. Average approvals for category C are going to be from 10 to 100,000. However, it can be more. Let's say the lender likes the product, he thinks it's a unique It's a niche for the market, something that the market needs. You can go all the way up to 2 million. Credit score around 550 at minimum. These aren't credit-based loans. It does vary. So that wraps it up for our lending category C. Hopefully this helps understand more about what we do, the underwriting process, who we're working with, and how you fit into the picture. For anyone who hasn't applied yet, we have a link in the description for you. Someone will be in contact to gather a few details. From there, we start the underwriting right away. And it's just that simple. So thanks for watching. We'll talk to you soon.